Hi, and welcome back to Peak Performance with Dr. Doug. I've got Todd Gordon here. Todd is a senior technical strategist and trader at Forex.com. We just had him on a couple minutes ago for a segment, and we talked about a lot of the technical parts about the market, what you're looking at. We're going to dig now into the mentality, some of the things that traders deal with. Todd, 10 years of experience, right? And you do a lot of training, a lot of development of people. I know you write a newsletter for Forex.com. Some of the things that we've talked about before, the concept of holding on to winners. Now, I'm a trading coach. I work with a lot of traders, and that comes up quite a bit. I want to know from your perspective, what are some of the challenges that you face about holding on to a winner?
Personally, for me, I've worked very hard on entrance into the market, exit on a stop loss, on a losing position, and my first take profit. Those three keys of a trade I feel like I've progressed quite well on, and that comes from disciplined technical approach to the market. But it always seems to be, this is my constant recurring problem, I'll defer to you, the expert, psychology that happens when you have that big winning trade on. I just, for some reason, incessantly feel the need to take that winner off when it's gone so far. I have a hard time, so to speak, breaking out of my resistance level to take a 100, 150, 200 pip trade. It might be a 500 pip trade, but it seems to be those three parts, entrance, exit on a stop, and initial take profit are technical. But once I get into that big winning trade, it seems to be my technicals and my approach kind of go out the window and I succumb to emotions.
Right. So when I get tapped with that question on how to help traders deal with that emotion and that process, we touched on it last time. We talked about the game plan, the importance of having a game plan and a structure. Traders do a very good job of setting up game plans at the beginning before there's risk on the table. And then as risk starts to develop and they start to see the P&L move into the trade or out of the trade, they start to maybe think about second-guessing that game plan and that strategy. The technique that I give clients to help them compartmentalize that emotion, because they're going to feel the emotion and the temptation, but to compartmentalize it, they got to ask themselves a very simple question. If I didn't have a trade on right now, if I just walked into the market for the first time, what would I do? And that question right there objectifies the process, because when we get caught up into how much we're up in the trade or how much we're down in the trade, the monies become emotional to us rather than seeing it objectively as, well, the market doesn't know that I'm up money, so why should I trade any differently? And as you pointed out before, the importance of a game plan at the beginning, having that established, and then going back to that game plan and saying, is that game plan still relevant? Has anything fundamentally shifted in the market right now?
I can see that in the first, say, two-thirds of the trade. But again, if it's a big winning trade, I think the trade is taking you out of the time frame that you can see into the future, so to speak. If a trade is going to be on for 2 to 3 days, you plan, and you wind up with a trade a week out from now, it's kind of hard to see out in the future. So you can't, based on your technicals, your analysis of the market, see what the market environment is going to be like. So I think, to your point, start it over as a new trade. Say, what I put the trade on from here, even though I'm up 300-400 points in the trade.
Right. And the expression that I think that's good advice to follow is, do I have edge? Do I have a competitive advantage in this trade? And it's not an all or nothing situation. I look at it like a swing balance with my clients. When you have a lot of edge, you put on larger size and take more risk. And as that edge changes, if you have less edge, by definition, if you enter a realm of more uncertainty, you're having less edge, and then you should be taking some of the risk off. It doesn't mean you liquidate the position, but it also doesn't mean that you want to keep on the same size that you had when you had a lot more edge. So again, it's that swing balance of more edge, more risk, less edge, less risk, and just as an ebb and flow. Keep that trade moving around.
That's good.
Yeah. Now, in your professional experience, when you do this all day long and you trade professionally, the distractions that you deal with, okay, I know money is one of them, but talk to me about distractions about people around you or interacting with others and learning information.
I actually, I sat in a desk, about 15, 20 guys, and FX, especially in the time frame we deal at, can be a lot of noise. News comes in, brokers say we got buy-sell orders at this level, and I'm a technical trader. I've been trying to stretch my time frame out, so what I actually did was I left our New Jersey office, left the trade desk. I sit in our Wall Street office now with my iPod on. I completely blocked the noise out, so I've completely left town.
But now let me pause right there. And that's a strategy that I've recommended to some clients and traders at the end of the day. But then they say to me, well, what am I missing? Maybe I'm missing information from people around me or on the desk.
Well, if you get to a certain point in your trading career where you say, I know where I'm at. I've tried and gone through all the different buy-sell systems, ways to analyze the market, and I know where I am. I'm happy, content with my system. I'm done changing, and I'm always trying to tweak it and perfect it, but I know who I am as a trader, and I know the inputs that help my style But as far as that, I can block everything else
So you're
out.
talking about trusting yourself.
Yes.
Having faith in the markets, but trusting yourself. Most importantly, sounds like you're talking about trusting yourself to put your own plan in place and then executing that plan.
And even more to the last segment we went over, when things don't go well, when you do hit an inevitable drawdown period, don't go back to the drawing board. Don't pick up the latest technical magazine and try to redo your style. Your style is not always going to work in every market, so have the confidence in your style to sit back, relax, wait for the market to come to you, because it will jump back into the flow.
Todd, awesome stuff. Thanks for joining us, Forex.com. Todd Gordon, professional trader. Thanks very much for joining me this week on Peak Performance with Dr. Doug. If you want to learn more about what it takes to be great, come visit my website at drdoug.com.